not only is crypto offering them an opportunity, but we're seeing the rise of the speculative economy. And we're seeing it in prediction markets who are in this trap. They're deep in the middle of this trap.
I do think the second half of this year will be a explosive up move. And you're seeing this, like the stablecoin adoption is happening at the same time. But if Bitcoin were to go to, say, 500,000 by the end of this year, not predicting, I'm just saying if it did, because of a short squeeze, which I think is going to happen at some point from all the people realizing that it is a finite asset and there are people that need to borrow on it because they got in trouble from 21, 22 and they're borrowing future production and blah, blah, blah. I've now gone through this. If we get a spike, well, that'll put it at $10 trillion in terms of Bitcoin. You'll have the entire ecosystem go up. I just have this belief that instead of this being a boom, I view this as a disruptive shift in money that has to happen at a time, not when the fiat system is doing well, but when the crypto thing is doing so well, and it's not based on speculation, it's based on the transfer of money.
With no way out of the debt cycle, more and more people have turned to crypto. Bitcoin is now the pressure point, and just a short squeeze could send it straight to $500,000. That's the latest message from high-level investment analysts Rawl, Pal, and Visser, Jordi. In a recent discussion, Pal and Jordi shared a high-conviction outlook of where global liquidity is headed and how crypto fits into that macro picture. They believe we are entering a phase of accelerated capital expansion, driven by aging demographics, low productivity, and rising sovereign debt. As a result, liquidity is flooding back into the system, and crypto stands to benefit more than any other asset class. Pal and Jordi see this as the start of a new cycle, and they argue that the repricing of crypto assets could last well into the next year as the macro tailwinds continue to build. Make sure to stick around until the end of the video, as Rawl Pal, together with Visser Jordi, breaks down the signals they're currently tracking and the structural forces driving this next phase in crypto.
As people are realizing that speculation is somewhat warranted because they have no other way around it. But it also leads me into, well, the good thing that speculation is doing is testing all these things in crypto, these new ideas. They get tested like memes, which is like capital formation, instant capital formation. And also humans, if we're not in a job, we'll probably still speculate because it's fun. I don't know, there's a big rise of this speculative economy, I think is a big mega trend that people don't really see. They're too cynical.
All you have to do is go to the Fred database and look at the chart of gambling as personal consumption expenditures of gambling, which is now over $200 billion a year in the US. And it's a perfectly linear incline. And then you go and look at how much money is spent on new cars in the US, and that is on a decline. And the numbers right now for new cars, personal consumption expenditures, are below $250 billion. And I'm sure after the tariffs, they'll be even lower, which means gambling is just taking over as a major, major part of the economy, which I think everyone knew because they can see it on TV. They realize there's, fan duels everywhere. But I don't think people have gotten to the point of why. And I do think it is a very major thing for younger people because of the boredom. It's a form of education. They view experiences completely different than we did. And at least they have a chance of getting money, where if they spend money on an expensive dinner, it's just lost. And so I do think crypto falls into that. I do think needing real-time information, real-time pricing, doing things when you want, it all fits in with a faster world and settlements of money, everything. So I do think it's a representation that the world is getting faster and that matches AI. But I also think it gets into the boredom and the anger that people are having towards not being able to enjoy their lives the way they would want.
And when you look at the crypto landscape in terms of the adoption now, what we're seeing, all of these corporate treasuries, what does it mean to you?
So I think this year and really the last, I want to say 18 months, has been about accepting a gradual acceptance of Bitcoin as something which will be here 5 to 10 years from now. So I think
remember when we first met, you were still struggling to explain to traditional hedge fund people and finance people that this was meaningful, and they thought Jordi was a nutcase. And now suddenly everything's changed, right? You are changing. A nutcase, but that's separate.
Yeah, that's completely separate. Bitcoin's being accepted more and more every day. What is not being accepted at this point. And actually, this is a good place for us to talk a little bit about it, because I've said this on my YouTube videos. This feels a lot in the altcoin world like the post.com bubble to me. It feels like there's a lot of people that got involved. So think of the internet from 95 to say 2000. A lot of people joined into it. They left banks. They got involved. And they were hoping to make tons of money. It was a free thing. Everyone got involved. And then you had this big fall. And it took a while to come. It took a while for the NASDAQ to get out of the problem. And one of the reasons it took a while to get out, just like it was in Japan with all of the banks owning shares of, everything about this overhang of people that had gone into something. Every time anything goes higher, there seems to be a wall of supply that stops it from the crypto community. Now we've got circle enthusiasm. So we've got people focus a little bit. You got Coinbase back up to the highs. So I'd say the traditional finance world is getting a little bit more excited. Now you've connected, in the last week, you've connected, CoreWeave and Core Scientific. So now we're getting some of the Bitcoin miners back involved. All of a sudden, the traditional finance world is starting to see things. I have said publicly, and I will continue to see it until Ethereum breaks out. Because of the network effects on stablecoins, which I think is there. Until Ethereum breaks out, just another OG of one of this, and people start getting on board, I don't think we're going to have the kickoff to what I believe will be the end of the dot-com bubble overhang. And I think that's what we have in crypto from the 21-22 period. A lot of overhang. It seems like there's a lot of supply. And once we work through it, I still believe there's going to be a short squeeze in the entire space this year.
Yeah, I think you're right. And the ETH breaking new highs is probably also Solana breaking new all-time highs because it hasn't broken where it was. And that is a mass wealth generation event. There's a lot of people involved in this. There's a lot of fortunes to be made, and that creates a whole new cycle of reinvestment and opportunity risk-taking and stuff like that. It feels like it's coming. When that is, most of my work suggests that, this year should continue and maybe even the first 2 quarters of next year.
Economic pressure is forcing people to take risks they wouldn't have considered a decade ago. With wages lagging, debt rising, and access to traditional assets slipping away, speculation has become a survival mechanism. In the US, gambling spend has surged past $200 billion annually and continues to climb, while car purchases decline. A clear sign that speculative behavior is replacing conventional consumer choices. Crypto fits this environment perfectly. It's fast, accessible, and built for real-time participation. According to Pal and Jordi, institutional confidence in Bitcoin continues to grow, but altcoins are still constrained by leftover supply from the last cycle. That weight may finally lift if Ethereum and Solana break past their old highs. Once that happens, a broad short squeeze could hit the entire crypto space, pulling in fresh capital and triggering the next round of wealth creation.
Here's a question I want to ask you. One of the things that we have done the work on is that, and this won't surprise you, the main driver of alt season, as you call it for the smaller stocks, is actually the business cycle. And the business cycle is the same driver as small caps versus big caps. It's EM versus that. It's junk versus, it's always the same trade, because once the business cycle picks up, people have earnings, they go further out the risk curve, it gets reinvested. Why has the ISM remained so low? This is, you and I have looked at this forever, for our whole careers. This is the longest period below or at 50 in the history of the ISM. What is all this about?
So I remember Julian and I sat next to each other at dinner for the event, and you've heard me say this. In fact, I remember when I saw.
I know there's no business cycles. I get that.
Correct. So here's the part that I'll say though. It is the problem that in a world where artificial intelligence is coming, there should never be a time that the ism takes off. It just shouldn't happen, in my opinion. Now, I'm going to change that a little bit because I do think we're getting closer and closer to something which is related to the business cycle of AI. Because at the end of the day, if I equate all cycles to power, meaning You have to be building something, and oil has always been, it's that macro piece that offsets and is out of control of monetary policy and fiscal policy. You need power. That is the thing that needs to fuel it. And AI consumes an enormous amount of power. And we are going to start to see, well, it's ironic I say this to someone in Spain, but we're going to start to see important blackouts. And there's going to be more of them in the US. And I think they're coming very, very soon, because I don't think people have looked at the exponential move. And this fits into the alt season side to me. So I believe we are going to see a change in the business cycle. I just don't think they exist in the push button way that they did, where you do something in the economy and it goes. But I do think it's coming this year because of what's going to be needed for the infrastructure build out on data centers, on power. These are massive numbers, nuclear. This is going to be a change. I just think it's going to be financed by the government.
The middle American, the median person, has had their mortgages up here, their car payments up here, their credit card payments here. They're still like this.
Yep.
Right, the stock market goes up, a bunch of rich people get richer, and sure, their pension plans might be going up, but that doesn't make a difference to their pocketbook. And the moment they start cutting rates, allowing rates to fall, people can refinance their mortgages and the money will flow.
Yeah, I think what Trump is saying to everyone is the bet he wants to make is to move rates as close to zero as possible. And whether that's 2%, 1%, it doesn't really matter. I think the rate cuts that we did before were a normalization rate cut. So we overshot and then we moved them to a level where you could make the argument that, okay, now we're normal. The next rate cuts to me will be the actual rate cuts that we were expecting. That'll be the trigger for the business cycle. And it'll come at a time where I really do believe we are underestimating just how much build out is going to have to happen to deal with all this compute. The humanoids that are coming behind it, the full self-driving vehicles, the AI native phones, the battery needs. I mean, I've tried to explain to people in my writings with how much hardware is needed for the embodiment side. And I think you're seeing that in the semiconductors. I think semiconductors are the oil of this, generation. Yeah. And they're breaking higher and they're broadening out. It's not just NVIDIA anymore. It's the analog names. And I think that's in preparation. So I would be using, and I have in the past, and I'm sure you have too, if you haven't seen this so far, the SOX relative to the NDX, it's having its best quarter in the last 25 years. And I think that's a kickoff phase, because I think for a true business cycle scenario that you're talking about, semiconductors should outperform software, and that's what's necessary, and I think that's what started.
In the end, where I get to in all of this is somewhere down the line, the marginal cost of electricity will go to zero. Mm-hmm. And therefore, you have infinite abundance of intelligence plus humanoids. And so what is money at that point?
Well, now you're getting into the point. If I told you, and I'm not predicting this, although in the back of my mind, I've decided, I don't know if you've ever done this, I've decided not to predict publicly where I think Bitcoin's going to go. But I do think the second half of this year will be a explosive up move. And I say explosive because I believe the most important thing that happened in the first half of the year was what Sundar Pichai said on the Lex Fridman podcast and also at the Google I.O. developer. When he said that from a year ago, we were up 50 times in token usage. Okay. Now, if you ask 100 people on Wall Street, what's a token with inside AI, 99 of them won't know what it is unless you go specifically to the tech world. When I hear tokens, I think AI adoption, I think inference, I think reasoning, I think AI agents are just starting.
Jordi Visser believes the second half of the year could deliver an explosive up move, driven by the rapid acceleration of AI adoption and the massive infrastructure demands that come with it. He believes AI token usage could increase by 50 times as reasoning, inference, and autonomous agents begin scaling across real-world systems. This surge in compute demand will require large-scale investments in energy, data centers, and hardware. Initiatives he expects will be supported by government funding. As interest rates decline and liquidity returns, capital may flow directly into sectors tied to this transformation. In his view, crypto is positioned to benefit from the speed, scale, and structure of an economy increasingly shaped by AI. Do you agree with his outlook? What about Rawl pals? Let me know in the comments. Anyway guys, if you want to stay most up to date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis. Trusted by over 90,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one, and as always, all the best.